So much, and welcome everyone to our 2018 Uniform Guidance Update. This is something we do pretty much annually for everyone, just to give you guys a little bit of update on what's going on. While we haven't had some new information regarding the Uniform Guidance, I will say that there's been a lot of change, and we are excited to be able to talk about some of those items with you, and also just provide you some reminders about things that we want to be paying attention to. So before we jump on in here, I want to introduce myself. My name is Melissa Galasso, and I am a director in the Audit Professional Practices Group here at Bekaert, and I am in the Charlotte office. But with me today, I have Leanne, who's going to introduce herself.
Hi, yes. So I'm Leanne Bagasala. I am an audit manager in the Raleigh, North Carolina office of Bekaert.
We are very grateful to have Leanne with us today to talk about all things related to the Uniform Guidance. So we are very, very excited about that. So let's kick it off first with our learning objectives. So what are we hoping that attendees get out of today's class?
So by the end of the class today, participants will be able to list the changes that have occurred under the Uniform Grant Guidance. They will also be able to analyze the type of common exceptions that have been reported under the Uniform Grant Guidance, and then also be able to describe any implementation issues that have occurred and the related frequently asked questions that have come out of the Uniform Grant Guidance.
All right, excellent. Well, we are excited to dive on in here. So let's start off before we go through this with a little bit of a polling question. So we want to find out from you guys, what type of entity are you coming from? So again, we're going to just have you talk here and give us a little bit of feedback. Now, I know these polls are new to you, so as we go through this, there's going to be a quick poll, and you're just going to type in what type of entity are you. So are you from a public school or university, city, town, or city, county, or town? Are you from an other governmental entity, or perhaps you're from a not-for-profit entity? Because remember, single audit applies to both governmental entities as well as to not-for-profit entities. So we would love for you guys to participate in the poll. Remember, you need to click on one of the 4 options that you see on the screen today. All right. Looks like we have some pretty good participation happening right now, so thank you so much for that. All right. Give you 2 more seconds. All right, excellent. So let us close that poll out, and we'll go back. So excellent. So it looks like we have a variety of people here. We've got 26% coming from a public school university, 38% coming from a city, county, or town, 23% coming a not-for-profit, and then 13% coming from some other type of governmental entity. So excellent. Looks like we have a nice mix of people to attend today's course. So beautiful. All right. So let's dive on in here to the material. So as we said, some of the things that we want to talk about in terms of the Uniform Guidance are some of the changes here. So let's talk about internal controls in particular here. So when we actually implemented the Uniform Guidance, there were some changes related to internal controls. So why don't you give us a brief overview?
So the requirements under internal controls can be found in Section 200.03. That's just one of the locations. But essentially, a non-federal entity must establish and maintain an effective internal control over federal awards that provides a reasonable assurance that the non-federal entity is complying with the federal statutes, the regulations, and the grant compliance. So those internal controls need to establish policies and procedures to make sure that transactions are being properly recorded and accounted for, and that also that funds and property and other assets are safeguarded. Those are just some of the examples of the internal controls that should be established. Those internal controls should, as a best practice, be in compliance with the Green Book and COSO. The Uniform Grant Guidance actually, when it first came out, there was these words of must and should. So must is defined as the Uniform Grant Guidance as being required. So a federal entity is required to establish internal controls, and then should is a best practice, and that is that the internal controls should be in compliance with Green Book and COSO. And those internal controls are required to be written policies. That is included in section 200.302. And then those internal controls that you have, they must be monitored throughout the year for compliance. And then if the entity determines that they're not in compliance, prompt action must be taken to correct that non-compliance.
All right, excellent. So as you can see here, there's quite a bit related to COSO and Green Book. Those are deemed best practices, but it does help as well to think about how you can leverage them, and it's a very popular topic. Let's switch gears here a little bit and talk about how do we deal with the time and effort reporting now. And this obviously is probably one of the biggest changes that we've seen. There's a lot of focus on documentation. So what would we want to be paying attention to here?
Sure. So under time and effort reporting, the Uniform Grant Guidance puts a lot of focus on more stringent controls surrounding compensation costs instead of procedures for tracking and allocation of costs. There's actually not a specific requirement for certification of time under the Uniform Grant Guidance, but that is a best practice. So here, the focus on the Uniform Grant Guidance is making sure that you're documenting those controls on compensation costs and everything surrounding your time and effort reporting.
So again, a lot of effort related to documentation. I think that's one of the key areas we want to focus on. In terms of required certifications, I think that's another one that people might not have noticed at 200.415. What are some of the unique aspects there?
So the importance on this section of the Uniform Grant Guidance is that when you have a report, such as an annual or a fiscal report, or even when you're requesting payment, the person that's actually signing those reports needs to be someone that's knowledgeable of what's going on to make sure that those expenditures are proper and in accordance with the terms of the contract. And that person actually needs to be authorized to bind the organization. So a lot of the focus is making sure that the person that's signing those reports knows what they're signing, and they're making sure that they have the authority to do so.
And so I think that one was really trying to protect people from, being liable for something that they really shouldn't have. So, in the past, it might be an AP person who had signed off on a federal form, and whether that person really should be the person who's signing off came into question. And so I think that really was one of the driving factors, is that we should really have people who have the authority to do so make sure that they're signing off, as opposed to just the person who might be, dealing with it directly but not really have authority. So I think that's a really nice change there as well. All right, so let's talk a little bit about sub-recipient monitoring, another change that was a little bit more prescriptive than maybe in the past.
So for sub-recipient monitoring, that's defined under 200.331. A sub-recipient is a non-federal entity that receives a sub-award from a pass-through entity to carry out a specific part of a federal program. So in review of the Uniform Grant Guidance, there is this idea that there is a subcontractor or a contractor or just a subrecipient. So every pass-through entity first needs to make sure they are understanding whether they're passing funds down to a subrecipient or a contractor. And if a pass-through entity determines that they're passing through funds to a subrecipient, they must do a risk assessment on that subrecipient. And then based on that risk assessment, they need to make sure that they're doing some type of monitoring activity if it's warranted. So that risk assessment that's performed, it needs to consider the subrecipient's experience with that award or similar awards. If the subrecipient got an audit, that's something that the pass-through entity needs to be reviewing. And then just making sure if there's any other changes that subrecipients had, that you're assessing that based on risk, and then making sure that the monitoring activities that are occurring after that correspond to that risk that is documented in your policies and procedures. So if a past entity determines that a subrecipient has identified risk, but you still want to pass those funds through, then you need to make sure that there's some additional policies that you're following to assess and monitor that subrecipient.
And if you think about it, if you look in the subpart related to the federal agencies, all federal agencies are required to do a risk assessment of the initial recipient. And so if they determine that you, as an entity, as a direct beneficiary, were the person that didn't have any risk, they wouldn't want you to just flow that money through without continuing that risk assessment. So the risk assessment actually starts at the federal agency level, but when you act as a pass-through entity, the goal there is really to allow them to ensure that that risk assessment is then performed at the person who's ultimately going to spend the money. And you might have someone who has a history of maybe not being the most prompt, and so you can do things like move people to reimbursement basis as opposed to advanced funding. You can look at more requirements regarding what kind of notification you would need to have, or more reporting as opposed to annual reporting, maybe move to quarterly reporting to make up for those areas that you determine there might be risk. And so there's lots of options in those specified conditions that can be really helpful in making sure that we do a good job monitoring as we are flowing through these federal funds. Let's talk a little bit about indirect costs. And a lot of times we focus on allowability of direct costs, but indirect costs, there were a couple of key changes here that will impact a lot of entities.
Sure. So for indirect costs, a federal agency and all pass-through entities must establish an indirect facilities and administrative cost rate that is negotiated, or you have to actually notify OMB as to why a rate hasn't been negotiated and accepted. There is in the uniform guidance a 10% de minimis indirect rate that's allowed, and if you decide that you're not going to let that de minimis rate of 10%, then you actually have to disclose that in your SEFA or your notes to your SEFA. One thing that we're going to go over a little bit later in the slides is some frequently asked questions that came out from the uniform grant guidance. And in that frequently asked questions, there are 15 questions that people had that relate specifically to the indirect cost rate. So later in the slides when we go over where you can find that, I highly recommend you to look at that just to have an idea what the questions and the answers that are out there that give some additional clarification on the indirect cost.
All right, excellent. And so, yeah, there's a couple of things regarding whether you want to renew and how long you want to renew, or if you're going to use that de minimis cost rate. But again, the disclosure regarding the de minimis cost rate applies to everyone, whether you use that de minimis cost rate or not. All right, our last topic here is going to be procurement, but we're not going to cover it here. We're going to actually cover it in pretty big detail because there have been a lot of changes here. So let's talk a little bit about why do we have to think so much about procurement? What is this, what has changed so that procurement has become this year's hot topic for single audit?
So initially, the procurement standards that were in the uniform grant guidance were delayed for 3 years. And that was for entities to develop and kind of enhance their written procedures related to procurement, and then also to make sure that the systems that they had were ensure that they were complying with the procurement standards. So as you can see on this slide, for June 30th year ends, the procurement standards are applicable effective July 1st, 2018. For those that have December 31st, the standards were already applicable January 1st. And then for our September 30th that may be on the call, those procurement standards are applicable October 1st, 2018. There is not going to be any more extensions related to procurement. So we wanted to spend, some time going through these procurement standards just to make sure that everyone is aware that these are already applicable or they're coming applicable for you. Just to kind of start off for those that are on the call that relate that are states or work for the state, there is one section of the procurement standard that applies to state, which includes all your executive, legislative, and judicial branches. States are required to follow the same procurement policies and procedures for federal dollars as they do for state and other fundings. There are some entities that are actually legally separate from the state, and those don't actually fall under the state procurement standards. An example of that is, since we're in North Carolina, the North Carolina system and community colleges, they're actually discretely presented component units of the state, and so they're legally separate, and therefore those entities don't actually fall under the state procurement standards. For states, though, states must comply with Section 200.332, which is procurement over recovered materials, and then also states must ensure that all clauses required by Section 200.326 are included in their purchase orders or their contracts. So that's just specific information related to states.
And I think this is super important for everyone to remember, that there are rules for states that have always historically been different, and whether you qualify under that exception, they did define state in the uniform guidance, and so we need to be careful to ensure that we understand when we are scoped in and scoped out of these exceptions. And so that seemed to have been, especially in North Carolina, more of a hot topic this year as to when people thought they were getting an exception versus when they were entitled to the exception. All right, so then we have to look at, okay, well, what if I'm not a state? So I don't get this nice little exception. What do I have to do, and what are some of the key risks that we have as we go into our adoption of this?
Sure. So for all the other people or the non-federal entities, you must have written procurement policies in place. Those policies definitely need to include a conflict of interest policy that not only goes through from an individual or an organizational level, but also what to do if there is a conflict of interest that occurs. As regards to oversight, you need to perform oversight over your contractors. That oversight, you could use a contract administrative system, but it's not really required. But under procurement, you just need to make sure there's some form of oversight over those contractors to make sure they're doing what they're supposed to do. Additionally, when you're using federal money, you're supposed to use it wisely. So a couple examples that we have of using federal money wisely is to avoid unnecessary or duplicate purchases. If there is a state or interlocal agreement, to use those. We will kind of go a little bit more into detail about those. And then also, if there is any federal excess or surplus property, try to use those. As far as your contracts go, awards must be awarded to responsible contractors. And that means contractors that not only can do the job, but then they can also follow up on those administrative requirements of the contract. And then again, another item here is documentation. A non-federal entity must be able to prove that they complied with the procurement standards, and that means that you're going to have to maintain records that detail the history of your procurement action that you took.
And I think one of the biggest risks when we look at people is that that history detail is very, very detailed. They actually want you to say why you selected your contract or why you selected the particular method of procurement. And so the details that you must maintain for your purchases is actually very detailed, a lot more prescriptive than it was in the past. And so for a lot of entities, when we do on-site reviews for their procurement policies, what they're noticing is that they're not necessarily keeping detailed level of documentation for an auditor to come back through. So you definitely want to make sure that you review that section to ensure that you have all of those aspects covered, and by type. And so we're going to talk about the various types of procurement methodologies, but there's going to be requirements regarding how you came to certain decisions that might not be today something that you're actually documenting. So definitely something you want to focus in on there. Okay, so let's talk a little bit about competition. Now this is, when we talk about competition, there is a method of procurement that is a competitive process. And so what do we mean by competition, and what are some of the items that we need to think about when we consider something to be a competitive bid?
So procurement actions need to make sure that they're open for any reasonable contractor to submit a bid or proposal. The uniform guidance actually goes through some ways that grantees sometimes write their request for proposals, in an inappropriate way that limits competition. And some of those examples are in the request for proposal, there are unreasonable requirements, or there is a requirement for excess bonding. And sometimes even in those requests for proposals, grantees are requiring a specific brand name to be used when really any brand name would do. So those are some of the ways that the request for proposals are inappropriate and limiting competition. One of the items that are in the procurement standards is that you should make sure that individuals like small businesses or women-owned businesses have the ability to bid on any solicitation that's out there. If your entity has a pre-qualified list of vendors that can be used, you just need to make sure that that vendor is also not limiting sources of competition. And then again, you have to have written procedures in your bids or requests for proposals that include enough information that the person that's actually bidding on that bid or proposal know what they're going to be graded on. What are the technical requirements and other requirements that are going to be used to evaluate those bids or proposals? Those need to be documented in the request for proposal or the bid.
And that's a really important concept here. I always refer to this when I'm teaching as the syllabus. So if you remember on your very first day of school, the first thing the teacher would do would give you a syllabus, and it would say that your first exam was worth 20% and your second exam was worth 30% and your final exam was going to be worth 50% of your grade. Well, that's basically what they're asking for here in terms of the competition. What are you going to do? What requirements are you going to use to make this evaluation? One, so that everybody knows how they're going to be graded when they enter into it, and two, so that it's consistently applied and you're selecting the right bidder based on the factors that you identified. And so I think that's a really helpful for the people who have to bid on these, but it's a lot more work for entities as they're going through this. Another topic you have here is the effect of state law. How does state law interact with uniform guidance?
So you must follow the state procurement laws. However, the caveat is that if your state law is less restrictive than your federal law, then you need to follow the federal law. So for example, if your state law says that you need a bid when you reach expenditures of $500,000, but your state or your federal law says 150, then you need to follow your federal law. So whichever law is more restrictive, that's the one that you need to follow.
All right, excellent. So again, just trying to remind people that the relationship here is, even though this is federal funds, you still have to also follow the requirements of your individual states. So the next thing, there are 5 approved methods of procurement, and there's literally only 5. So you have to select one of these 5 in order to make a procurement under the uniform guidance. So can you walk us through the 5 methods?
Sure. So the first one is micro purchases, and that threshold currently is $3,500. And we've included the reference here of where you can find that threshold. That threshold is actually pegged for inflation. So remembering the number is really not going to help at this time. Just kind of knowing where you can find that number is what you need to kind of focus in on. But any purchases right now that are under the threshold of $3,500, no procurement action is required. That means no price quotes or no bid for things that are that small. Then you have the small purchase, and that's for all purchases that are under the simplified acquisition threshold, which is currently $150,000. So that number again is also pegged for inflation. So we've told you what it currently is. It's $150,000 now, and then we've told you where you could go to look up that threshold if it does change. So any purchases that are over $3,500, but less than $150,000, you would need price quotes from an adequate number of qualified sources. And then you have sales bids and competitive proposals, and those are for all purchases that are over that simplified acquisition threshold, which is currently $150,000. And then the 5th one is non-competitive proposals. And for those, we typically associate that with our sole source providers, but that also includes emergency situations where you just need to get something in a situation where you can't go out for bid or get a whole bunch of price quotes. and then also when you have written approval or competition is inadequate for soliciting proposals. So those are your 5 methods. Again, the micro purchase and the simplified acquisition threshold are subject to change.
And it's important here to remember, just give me 1 second, sorry. Some of the nuances that are really important is that this is why you need really strong policies, because, for example, under the micro purchase threshold, you can purchase from anyone you want. You don't have to go and get any quotes at all. But it does say that you can't buy over and over again from the same entity. So, for example, if you wanted to buy a stapler, you can buy a stapler today from Staples, but if you needed to buy a stapler tomorrow, they would like that you select something other than Staples. And so they actually use the term must here. You must spread micro purchase around among all qualified entities. And so the reason is if you're not getting any quotes, then you don't know if you're getting the best price. All they say is it has to be reasonable. And so when you're developing your policies, you're going to have to indicate how you're going to ensure that you are making these purchases over an acceptable number of entities. Now, you don't have to use micro purchases for supplies. Inevitably, the question pops up is, well, what if I put my supplies out to bid and I selected one vendor and I only use that vendor for supplies? Well, then you didn't use a micro purchase. You used a competitive proposal and you selected or you probably actually used a sealed bid and you selected the entity that had the lowest price. So properly labeling your method is super duper important, and having the right documentation in your policies. In addition, for that small purchase, it does say that you need to get an adequate number of quotes, but it doesn't tell you what an adequate number is. If you're in a very rural area, 2 to 3 quotes might be acceptable. But if you're in a large city, maybe it's 5 to 7. And so you're going to have policies that define what is an adequate number for your entity so that people can be compliant. Because while they require certain items, they don't specifically state how you have to implement them. And so your documented procedures are going to be there to be the support to ensure that you are compliant with the standard. And so very, very important when you're going through these methods of procurement that you're looking at all of the impact that it would be to your policies and procedures. So thank you so much, Leanne. All right, let's talk a little bit about minority-owned, small, women-owned businesses. What are some of the rules here that we need to follow?
Sure. So when you are going out and soliciting request for proposal, you need to make sure that is allowing for full and open competition. So entities should make an extra effort to include the economically disadvantaged businesses. So those are the small, minority, and women-owned businesses, and also the labor surplus areas and firms, just making sure that your proposal or your request for proposal is reaching those type of entities as well. And then as far as the procurement for recovered materials, that applies to state agencies or agencies of a political subdivision of a state and its contractors. And that covers procurement for solid waste management services. And it requires the establishment of a program to procure recovered materials. So think recycled materials like carpet, building insulation, oils, and lubricants. For vehicles, that information, there's also standards related just specifically to recovered materials.
All right, excellent. And so those obviously are very, very detailed, so we want to make sure that we are paying attention to some of the more critical aspects there. All right, other things regarding some of the very detailed aspects of contract cost and price.
So every procurement action that is occurring that's over that simplified acquisition threshold, the entity needs to make sure they're performing a cost or price analysis prior to soliciting that for proposal. So that means an entity needs to come up with an independent price of what they think they're going to get back in those bids and proposals. And that analysis is not supposed to include the profit, your negotiated profit, and then also you have to keep in mind the cost-based price needs to be based on allowable cost only, and then there's you shouldn't really include your time and materials, and then also cost plus a percentage is not allowed at all. So just making sure that before you go out to bid, you have performed some type of analysis to know how much is it going to cost before you do that, before you go out, so that you have a more educated knowledge when those bids come back.
All right, excellent. And then again, I think there's just some of these things that people won't necessarily be aware of. That time and materials is probably one of the ones that I think is going to be issue, as well as the cost plus. All right, well, let's keep going. And we talked a little bit about some of the pass-through entity, and basically the concept here is if the awarding agency did it to you, you have to basically do it to your subrecipients. And so what are some of the documentation that pass-through entities are now required to consider?
So if you are a pass-through entity and you give money to a subrecipient, your subrecipient agreement must include terms that allow for you to review the subrecipient's documentation regarding procurement. So what you're essentially having to do is you need to make sure that your subrecipient is following the procurement standards. So in your agreement with them, you need to make sure that they're giving you access to review all their procurement documents. So that's going to mean the technical specifications they use, the request for proposals, their cost estimates. All that stuff needs to be included in your agreement so that you can review those things to determine if they're in compliance. If you have determined that they're already in compliance, then it wouldn't need to include that, those standards, but that's only if you've determined that they're exempt from that review.
So again, I think this is one of those areas where the detail that's in the procurement standard is alarming for a lot of people that they weren't aware. Do you think this is somewhat the reason why we've seen such a delay in the implementation?
Absolutely.
All right. Do you have anything else for this slide before I move on?
Yeah, so the last thing up here is just that there are minimum bond requirements unless your federal agency or the pass-through agency has determined that the federal government's interest is otherwise protected under their policies and requirements. So here it just lists that the minimum bond requirements are that the bid guarantee must have 5% of the bid price. There's a performance bond requirement for 100% of the contract price and a payment bond for 100% of the contract price.
Now again, very, very detailed in terms of what those requirements are. There's not a lot of judgment allowed under the new standard, and I think that's one of the things that concerns people. All right, so let's look now here at some of the requirements in terms of provisions, and then you've given some North Carolina specific examples, but talk a little bit about how that could apply to others.
Sure, so all contracts must contain the provisions that are in this Appendix 2 of the Uniform Grant Guidance. So all contracts must have those, and then there are some additional provisions that you may have, such as debarment and suspension, and then other contracts may have Davis-Bacon requirements. It's just making sure that you have the provisions that are required to be in there, and then if you decide that your entity wants to have some other provisions, just making sure that that gets in there as well. For local governments, colleges, and university, again, you just have to make sure for procurement-wise that you're following both your federal and state requirements, and you're using the requirement that's the most restrictive. So when you're going through your procurement policies and you're trying to figure out, do your policies are going to encompass all federal and state requirements at once, or if you're just going to have a blanket statement related to your federal money, just making sure that that information is communicated to all of your employees, and all of your employees are trained as to what your new procurement policy is going to be. Since Melissa and I from North Carolina, we do have an example in here related specifically to the uniform guidance specifically for the state of North Carolina. The Local Government Commission for the state of North Carolina, they've actually prepared a memo that does a comparison of the state law to the Uniform Grant Guidance procedures, and that's actually, we've included the reference here, that's LGC Memo 2018-06, and then another example that we have specifically for North Carolina is that The UNC School of Government has a website where they actually go through example policies and cost analysis and other items specifically related to the procurement standards. So we've included that link here if you're from North Carolina and you want to look at that. But again, we know that not everyone is from North Carolina, so your state agencies probably have resources out there that you can look at to determine if there's anything that you could use as examples, and then also just reach out to them if they've done any type of analysis that would help you determine what the state laws are and the uniform guidance, where they kind of differ.
All right, excellent. We know, I think Florida has quite a bit of differences between the federal and the state, and they also, like North Carolina, have a state single audit act, so that adds a little bit more complexity to certain states that above having just a single audit act, they actually have a state single audit act that they're required to follow, so that can also add to it. So let's talk a little bit about the local governments, colleges, and universities in terms of some of the issues that we've heard in terms of implementing. So this has been probably the hottest topic the last couple of months in terms of conferences and trainings that I've attended, and I'm sure you've had the same thing. So what are some things that we need to think about here?
Sure. So you just need to be aware there are some unallowed procurement actions, and those are piggybacking, co-op purchases, and then group purchasing programs, unless that's being run by the local government and it's classified as an interlocal agreement. So those are some procurement actions that are not allowed. What is allowed is using a state contract if the state contract actually followed the federal requirement. So again, if you're using someone else's procurement action, you just have to make sure that that is allowable and that they're following the procurement standards, the new standards. So if you're using a really old interlocal agreement or a really old state contract that you're using, using their procurement or their bid that they had, that they're following the new federal requirements. And when you're in doubt and you have no idea, you should probably go out to bid. So when in doubt, go out to bid. And then you can also contact your local agency if you have any questions related to a specific arrangement. Just making sure that those new policies do go effective July 1st. So if you're using anything that's an old procurement action, making sure that it follows the new standards.
And remember, if you have a December 31st year end, it's technically January 1. So that's only if you have a June 30 year end, is it July 31. So most entities on this line are probably June 30 or 9/30 year ends based on the information you guys provided us. But we do want to remind those who do have a 12/31 year end, some nonprofits do have nonprofit year ends that are 12/31, that technically it was as of January. And remember, when we come out to do testing as auditors, we're going to test procurement from throughout the year, and not just at the end of the year. And so if it was effective January 1, all procurement that happened as of January 1 is subject to testing. And so that is a big risk for December 31st if they were not aware of the delayed effective date sort of running out. So because the first year it was a 1-year delay, then it was a 2-year delay, and then last May they gave us our 3rd year. So I think we need to just be careful that you don't think that it has to be done by the end of the year. It's procurement that happened during the fiscal year, and so all of it is up for selection in an audit. All right, that brings us to another polling question, so let's take a look here. So is your organization ready for these new procurement standards? So I know this can be a little bit scary for some of you, so we've given you some options. And so the choices are yes, no, somewhat, and I'm not sure. Maybe this is not your area you work in. You might not work in an area, or you might not be familiar with what the procurement department is working on. So I think that is something that we should definitely, take into consideration. Is maybe it's a good idea to just ask what's going on, what are we thinking about at this point. So just a little bit out there. So again, you do need to click on one of the 4 options here: yes, no, somewhat, and I'm not sure, and make sure that we are selecting one that before we close up here. So I'll give you just a couple more seconds. All right, with that, let's close up that poll and broadcast those results out to everyone. All right, and it looks like we've got a little bit of everything here. So 33% of you are feeling pretty good. About a third of you are not sure, a third of you are somewhat, and then we have about 5% who are like, oh my Lord, this is something that I'm going to have to take a look at, which is totally fine, and that's why we're doing this today. All right, let's head back over to those slides now. All right, excellent. So let's look here at, now, is this stuff new or is this stuff changing?
This is new under the Uniform Grant Guidance, but it's been out there for a couple years. So I was thinking we could just go through this pretty fast because most people have probably already experienced these changes on their governments or not-for-profits.
All right, so let's run through pretty quickly these changes for the SEFA very quickly.
So for the changes for the SEFA, your SEFA has to have the cluster names on it and cluster subtotals. Also, if you receive those funds through a pass-through entity, the pass-through entity name must be on your SEFA and the identifying number. If you know the identifying number, it has to go on the SEFA or SEFA. Also, the SEFA should include your non-cash awards, and we'll go over that a little bit later in some frequently asked questions. And then if you give money to a sub-recipient, you have to disclose that on your SEFA in a separate column.
All right, so mostly that's about display here, and so making sure that we have proper display for the changes to the SEFA. In addition, we have some changes to the disclosures on the SEFA.
So for the changes in disclosures, two of the key things to pinpoint is that your balance of your loans or loan guarantee programs needs to be disclosed. And then if you decided to elect the de minimis indirect cost rate or you decided not to elect it, that needs to be disclosed as well.
All right, excellent. All right, so let's keep going here. One of the things is that there is a requirement here that we create a summary of prior year audit findings. Who prepares that and what does it have to contain?
So that summary of prior year audit findings has to be prepared by the auditee, and it must include the references to your prior year audit findings, so 2016-001, and then you must report the status. Is that corrected or is it not corrected? If it's not corrected, it's going to show up in the findings again this year.
Yes, and there is a requirement on behalf of the auditor to actually audit your analysis. So if you report that something has been completed and the auditor does not agree, that also can create a finding under the uniform guidance. So you want to make sure that you are keeping that prior year findings up to date. Another one that we have that's also prepared by the auditee is the corrective action plan. But last July, they threw us a little bit of a curveball. What did they tell us about the corrective action plan?
Yeah, so your corrective action plan not only has to be prepared by the auditee, but it also has to be on your letterhead. So that is a little bit different. Will look a little bit different in your reports. And then that corrective action plan, it has to tell you the who, what, when, and where, and all that kind of information. So if you have a finding, it's going to say who's that contact person that's in charge of that finding, what's the action that you plan to correct that finding, and then when's the anticipated completion date of that finding.
All right, the who, what, when of what is going on right now. In July, they issued an FAQ, and the FAQ indicated that it had to be on letterhead. They used the term must, so that was something that was a little bit of a surprise for a lot of us. All right, that brings us to another polling question. So we're going to pop up the poll here. And so it says, how knowledgeable do you consider yourself with regard to the Uniform Grant Guidance? And you have three choices here. You could say, I'm an expert. I rock Uniform Guidance. I eat that for lunch. Is it somewhat, I'm pretty good at this? Or, oh my gosh, this is like a foreign language. Where did you all find this? And so the question did come up. My favorite way to find the answers to these questions that you guys have been answering, I've been kind of sending you to various areas as you've been asking them. But my favorite place is typically to send you to Google Title II Part 200. That will bring you to the Uniform Guidance. That's the easiest way. And then just go to the ECFR, the Electronic Code of Federal Regulations. And so if you are looking to see the actual rules regarding the procurement standards, you can go and look them up at the CFR 200. So easiest way to do that. All right, let's close this poll and broadcast those results, see how we all feel. So we have a lot of people who feel pretty confident there, but not necessarily an expert. We do have some experts on the line, and I'm going to see who you guys are and invite you to come speak on one of our webinars. We always love to have some experts out there. And then some of you who are saying, this is just not my cup of tea, and we are totally okay with that. All right, so let's head back to those, slides here. And let's talk briefly about exceptions. This is probably what keeps most auditors up at night and probably a lot of finance people. So let's start off with, how on earth are we supposed to figure this out?
Yeah, so despite the goal of the uniform guidance, it is not always uniform. There are some exceptions to the uniform guidance, and OMB is the one that actually allows the exceptions. There are no exceptions to Subpart F allowed, but there are exceptions that are granted, and typically those exceptions are for compliance with existing laws or to continue a long-standing practice. They're not actually making new policies. So we've included a link here, and this is from what's posted on OMB's website. And I just want to warn you that this is a little old. This came out when the uniform guidance initially came out, and this is just a list of agency exceptions, and basically it's a 42-page document, and it goes through several different agencies where they may have commented on the uniform guidance, or they're saying, I want to do this instead. So for example, in this document, the Department of Transportation, they decided that they didn't like the definition of program income, so they clarified what they considered program income. Again, that's just more of going along with what they've always considered program income. So we've included that. That is a source that you can use. Just realize that that source is not all-encompassing of all the exceptions. That is just a starting place. You can look into the compliance supplement on OMB's website, and Appendix 1 of the compliance supplement lists certain programs that are exempt from Subpart D, which is post-federal awards, and or Subpart E, which is cost principles. So those are a couple exceptions, and then on the next slide we'll give you some more information on exceptions. So again, in compliance section, Appendix 7, Section 6, you have some additional information on exceptions. Unfortunately, OMB does not have a complete list of exceptions. So when you're going through these programs and you're trying to figure out what are the exceptions, auditors or those finance people that are trying to figure out that should review the program compliance supplement and the agency regulations when they went and implemented the uniform guidance, and there is where you're going to be able to find some exceptions. If you have a program that doesn't have a compliance supplement, going back to those agency implementation regulations would help you identify exceptions. For auditors who are, or CPAs who are members of the AICPA and the Government Audit Quality Center, they actually have, if you access their sources, they actually have a list of exceptions that the Government Audit Quality Center has put together that kind of helps auditors. And that list is very useful, but again, it doesn't have, it's not a complete list. It's very hard to have a complete list of exceptions because federal agencies can at any time make a case-by-case exception. So it's really hard to have a complete list. But as advised in Appendix 7, Section 6 of the Compliance Supplement, if you have any questions about exceptions, you can always reach out to that federal agency key management liaison for your program and ask them if there are any exceptions to the uniform grant guidance. Okay, and the next slide that we actually have an example of an exception, and this is just one that I found out there. It's from the Department of Defense, and there's two memos that came out in July of 2017 where the Department of Defense changed that micro purchase threshold related to procurement. So the threshold currently is $3,500, and they increased that from $5,000 to $5,000, and then also to $10,000. It just relates to specific things that are being purchased, and that was not really to disagree with the uniform guidance, but more to go along with their common practice that they've had in place. So that's just an example. That's one example, and I'm sure there's several out there, but that's just one that we could have readily available for you.
Absolutely. And remember, the AICPA tried hard. The Government Audit Quality Center put in a valiant effort to try to track these, and even they called uncle. So if you just think about that, if you're feeling frustrated right now, it's okay to feel frustrated because a lot of people are feeling a little bit frustrated because it's very hard to track this. As we have here, there are some other places we can look for changes to the uniform guidance, and so where are some other places that we can go?
So for changes to the uniform grant guidance, there is Appendix 12, which is effective January 1st, 2016, and that requires reporting of criminal, civil, and administrative findings as defined in the appendix, and it also requires recipients and sub-recipients to make sure that their data on SAM.gov is current. One of the sources that we mentioned several times through this slide is the frequently asked questions. And the frequently asked questions give you some additional content and background to the uniform guidance. They have the same authority as the uniform guidance, but if there's any discrepancies between a frequently asked question and the uniform guidance actually overrules frequently asked questions. In this slide, we've given you the link to the most recent frequently asked question, and one of the things that we talked about a little earlier is that one of the things that came out of this frequently asked question is that requirement for the auditee to complete that corrective action plan and for it to be on the letterhead.
Right, yeah, that's July. When we looked through those FAQs, we did learn a few new things there, so not surprising that that might be news to some of you. All right, so now let's talk a little bit about these FAQs. These FAQs have been really helpful. They've been addressing some implementation issues. Basically, people call the government enough. The federal government decides to put out an FAQ about it so that everyone hears the same answer instead of having to repeat themselves over and over again. And so in this scenario, I think this one, I recently did a GAQC webinar, and we spent 2 hours just on loans, and literally there was so much discussion there. But what are some of the issues related to loans expended? Leanne?
Sorry. One of the questions that came out for the frequently asked question is, how do you determine that amount expended for those loans and loan guarantees problem? And this answer is a little long, but the amount expended is going to equal the new loans made or received during the period, plus the beginning of the audit period balance of loans from the previous year, if the federal government imposes continuing compliance requirements on that money, plus any inter-subsidiary cash or administrative costs received. If the loans from the previous year don't have any type of compliance requirement other than paying it, then you would not include those. So again, new loans made during the year received, plus the beginning balance from prior year if there's a continued compliance requirement, plus inter-subsidiary cash or administrative costs received.
And this one is very hard because the question is if there's a continuing compliance requirement. The best rule of thumb is first check the grant agreement, second check the compliance supplement. Those are great places to find out if something qualifies to be a continuing compliance requirement, because technically the uniform guidance does not define what is a continuing compliance requirement. It just says it's above and beyond reporting and payment. And so we want to make sure that we understand if you are subject to that, because this will materially impact the face of your SEFA. All of your beginning or all of the ending balance from prior year, which is your current year's beginning balance, will now appear on the SEFA even though you received no new funds. So huge, huge impact. Getting that right is super important. All right, non-cash expended. So a lot of entities on the phone line here probably receive things like free food or for breakfast, et cetera. How do they deal with the non-cash?
So non-cash on the frequently asked question, it was just specifically asked about food commodities and donated properties. And the amount that should be on there is the amount expended, is the fair value at the time of receipt or the assessed value that's provided by the federal agency.
All right, so again, that might be a pretty big change. Again, we've been doing this for a few years now, so this should have changed when we originally adopted the guidance, but again, something to be thinking about. We talked earlier about that sub-recipient risk assessment. So the question here is a risk assessment really required if it's an existing sub-recipient who's entering into a new UG, so new Uniform Guidance Funded requirement? Now do we still have to do this new risk assessment?
Yes, you still have to do it. Unfortunately, you do not get out of doing risk assessment. All pass-through entities must evaluate each subrecipient's risk for noncompliance for purposes of determining if the appropriate subrecipient monitoring is occurring.
So again, this might be annoying to the person who's received this over and over again. Now you have to do this risk assessment, but that's what the FAQs tell us. All right, is a risk assessment required to be completed before issuing the actual award?
This is actually surprising to me, but the answer is no. Recent issued frequently asked questions stated that there's no requirement for the pass-through entity to perform that risk assessment before making the sub-award. Under the uniform guidance, the purpose of the risk assessment is to determine the appropriate subrecipient monitoring, and pass-through entities actually have the judgment regarding when the appropriate time for that assessment is.
All right, excellent. So again, I think that there's a lot of positive things that are coming out of this, but you do have to remember that you have to at least meet the requirements. All right, so credit cards, another one that I think a lot of people don't realize. Is there some requirement regarding when I can use a credit card or what can I use it for?
Well, I think that this question actually stems from the new procurement micro purchase threshold of being $3,500 and just trying to determine, well, hey, should I really change my limit to $3,500 so that people aren't going over that requirement to have price quotes? And the answer here is no, you're not required to limit credit card purchases. The uniform guidance just kind of reiterates that you need to have your internal control framework surrounding the purchases. So if you do decide to decrease it, that's definitely up to you. You just need to make sure that that's documented. The uniform guidance overall doesn't really specify the use of money, whether it's cash or charge card or credit card. So that is really up to the entity.
All right, excellent. That brings us to our last polling question of the day. And so again, how many findings did you have on your most recent single audit? Remember, this is anonymous. No one's going to be able to tell what you responded here, but we do just want to kind of see in terms of findings where you guys fell in that process related to your most recent single audit. So was it none, 1 to 2, 3 to 4, or 5 or more? I was talking to an auditor the other day. Well, I didn't name the entity, but she told me she had 99 findings on one of her clients. Have you ever had 99 clients or 99 findings?
No. I would not look for that.
Yeah, it sounds like a lot of writing to me because I was thinking of how much you had to write for each finding. I was like, wow, that's a lot of work. So very, very interesting. All right, so we'll give you one more second to close up. Make sure you have an answer there. You have to select one of our 4 options. All right, Morgan, if we can close this one up and broadcast those results. All right, so a lot of you did great. So we have a lot with that 66%, and then we had most, everyone had, for the most part, was pretty reasonable here, and only 3% have 5 or more. But again, a lot of that's probably related to changing guidance. And so the more changes there are, it's harder to keep up with it. So looks like overall you guys are getting good at understanding what the rules are related to the uniform guidance. All right, so let's get back to those end here so we can wrap up in time for everyone to go on with their very busy day as we go through this. All right, so where did you get some of the information for today as we are closing up for today's course?
So the most important source that we use, again, is the uniform grant guidance. And then we also use the frequently asked questions that we have the link to in the slides. And then we use some AICPA information that was out there.
Right. The AICPA does put together common findings and questions, so that helps us decide what is the most important across the country, because we might know our locality, both of us being from North Carolina, but obviously we want to think about everybody that's on the line here and make sure that we address your questions and your issues. So with that, I want to thank Leanne for taking time out of her very busy schedule. This is a very busy time of year for her to come out and to teach today's webinar, and I want to thank everyone on the learning team for making this possible. We answered most of the questions that came in. A couple of them were very particular in terms of they're very specific, and so I'm going to send you a link that has the answer, so I want to make sure that I give you the proper citation. and I can't copy and paste for some reason into the answer key here. So there's just a handful of you that I wasn't able to get your question answered, but for the most part, I answered throughout today's course. So I want to thank you guys again for joining me and for joining Leanne, and we hope to see you on a future webinar. Have a great day, guys. Bye-bye.